Today is March 13th. It's 7 p.m. market close, and Tesla is the stock that are going to talk today. Very first video for this channel we posted on 25th January. We were the very first introduction video was for the Elliott wave with stock that we discussed was Tesla, and around that time it was 185. Earnings were out prior to January 25th, and I had mentioned the way it looks like there is a gap up, is gap down happen. So that gap was going to fill, and I mentioned it that it would be very difficult for that gap to be filled and sustained, and we will be looking at the downtrend since then. And since then we were looking at 166. Right now 169. It's almost there. The reason to come with the video today is that there is some severity in the stock right now that needs a revision. And that is the reason we are talking. Very first video was longer, 41 minutes or something. We will try to keep it this one between 10 to 15, as I don't have to discuss the Elliott wave in detail. So in this one, what we are going to do is we will be going from recent run to backwards, and then we will come back to recent run as well to see what is the reason for that discussion right now, and why I think I need to revise something. So this is a Tesla. I'm showing you two upper channels over here that acted as a resistance in recent downtrend. And there's two lower channels acted as a support over here, and right now we are at 169. It's March 13th. So what we're going to do is basically we're going to draw the excuse me Fibonacci retracement over here, and as you can see that the Fibonacci retracement, we are below 78. Actually we are almost 80% is given down. Earlier there was a hope that if you see this wave over here, that was the very first one wave of going down in this wave. So we were hoping that the top of this wave can sustain, or the lower waves to the correction that happened will be able to sustain it. But if you see the volume picked up over here, and it's what it there is a spike and how it's going to react. So that is the reason that we are revising Tesla over here. And there is a second retracement being drawn over here for the run that happened from 100 to 300. And if you see the Fibonacci retracement levels are coming at which is 68% is already 177. It's below that, and now the next one is 70, 160, 61. That's where we are hoping that it should stop. If it's going anything below that, the structure gets weaker actually, and I will not advise to go in the stock at the moment if that happens. What we are going to see that these are the way the correction happen over here. This is my A wave, B wave, C wave. If you see the C wave that came down, there was a clear wave structure. This is one wave, then this one was third wave, and this one was the final fifth wave. So this was correction completion that is based on the theory, and this is my very first wave of the beginning. This could have been my third, but this one got weaker. So there was a warning sign when the gap down happened over here. It came down to 280 that we should be looking at the downtrend, and we were looking to follow this path actually. So whatever happened in the past. If you see the Fibonacci retracement, on this one, trend does on this one. If you see the next correction, this is my A, B, and C. That C was at the projection of the equality of this run came down. So it stopped at 106. In reality, it stopped around 98 to 100, which is quite fair, quite closer. That was a good call from this indicator actually, based on trend-based Fibonacci. So why we are analyzing this correction? This could be my A over here, B over here, and we could see the C. And if that is the case, then I need to know where I could stop actually. So that is the reason I'm showing you that this is the way correction happened, and this could be the middle. We thought, okay, what if it's going to come below this one? Then we have to look for other scenario that is going to take it down in Tesla. Again, this is the Fibonacci retracement of the recent run. I'm trying to show you something. So 70% comes at 161 over here. There was very first run was 115, the next run was 150 approximately. Right now we are down 129 something. This is just one theory that I follow, so that's why I was looking at it. Again, this is the parallel channel that I want to show you. That also earlier, very first one, if you see that in this one there is two channels over here, it was bouncing back on this one. This is a diagonal triangle. It's happening and it's expanding. Normally wherever the breakout happens, if it breakout happens on this side, then it's massive down, or if it happens on this side, it's massive upward. Really happens on fifth actually. So, and we are at that point right now. It could happen here. Most likely it's going to happen on the downwards. We will see. You can do AI search on triangle corrections, and you will get all the patterns. There are two basic patterns when it's going ascending and descending diagonal triangle. So this one is descending diagonal triangle. That will give you the clear idea. So So we are back to those parallel channels earlier that we were. This is on the shorter time frame. This is still in our daily and close-up look. So volume, if you see that the volume is being maintained over here, and the reason run the volume spike over here. Right now we are maintaining on this volume dotted line over here. The higher volume was, average volume was somewhere around over here, which is, if we are, this one is 105 million volume traded on a daily basis, then this volume looks around 180 to 200 million over here. So that's what I wanted to show you on a chart. I mean, time to time spike happens when there is a trade change happening, or trend is becoming certain that it's going downwards or upwards. Then more people join in that direction, so volume spikes. And if this is the sign of the spiking volume and it's going down, then we are looking for one massive pull down over here in Tesla. So earlier I was talking about, this is my A, B over here. So C was 191. Oh, sorry, that was this way. Now, based on the same concept, if we are doing that, this is my A, B, then C. If you see, it came 191. Earlier we were looking about this bigger correction, and that came at 106 over here. This one is fair. Now, if we are talking about this A over here, this entire is A, B. Where is our C? I want to show you that. So it's, if that happens, 159 supposed to hold it. So yeah, 159, 160 could be a good stop if it happens. It doesn't go below this one, and it still maintains this one to be called as wave one, and we are still fine. Structure is still good, but volume is a concern right now in Tesla. It's gonna spike to me, and the diagonal triangle descending one is not a healthy sign for Tesla right now. This is on a daily basis again. This is the, I'm trying to capture entire run in this one. Let's go to the next one. So this one is much better clear. So another theory is that if this is my entire A, B, and this is my C sequence, then but this is not the probability right now. The reason is that this structure over here, this is my A, B, C. I see the clear 5 waves forming out actually in this one. It's not visible, but I will show you in the next slide here. So earlier from A, B, C, this one was equality 1. Now this one A, B, sorry, this one is A, B, and where is 1 coming? 115. If that happens, it's massive down. And I don't want to enter in Tesla if it goes below 161, because there is no way stopping. What if around that level happens and bad news are coming? How much? It's not a good strategy to go in Tesla at such a high level if that is a scenario. And many of us might be already invested in Tesla. So averaging is not the concept. We should be buying only when there is a turnaround possibilities, probabilities are there. This is the way I was showing 1, 2, 3, 4. Still, this one is end of the correction if that happens, and based on that, 161 is one target, second target is 142. I do not go on 142. Even if it goes 142, then yes, we are looking at 115, and who knows, a little bit lower than that. So the wave that happened over here, 3, this one was 2.72 multiplication of the wave over here, 1 to 1. And if you see the correction that happened from 3 to 4, that if you see the gap, look at the gap actually that was filled over here. So gaps are interesting. And based on that calculations, what we are looking is 5 to 161 actually, and actually 160.69. The next possible scenario is 142. So keep an eye on Tesla. I will not advise buying any more Tesla if it dips 160, because there is no way of knowing where it would stop. Another 78 is showing me around here. If you see 99, and if you see this dip over here, but it's not that convincing for a buy over here. So Tesla can it stop at 160, and would it be worth buying it? 160, yes. If it stops, it would be worth buying it. You can have a strict stop loss of 156, or to be fair, 150 if you want to keep it like so. $10 stop loss if you get entered at 160. Then if it doesn't happen, then it's a massive downfall coming. I will advise actually to wait 2-3 more days and see how it does, what it does. Let me show you on TradingView one more thing that I just seen while I was trying to explain you something. Right now, as we are, it's loading. We are in the bull run right now, and whatever we are seeing in the market, that is just a correction. Corrections are healthier as long as it doesn't give up the wave that happens. If you see, if it doesn't give up more than 20 to 30%, it's healthier. If we are considering entire run from the bottom to the top, then it should not be giving up at the most 10% to 20% of the entire valuation on any stocks actually. So that's the concept. The chart is here. Let me put the bar. Let me put on hourly basis. So what I want to show you on recent run, let me draw you the Fibonacci trend buzz. This is my wave 3. If you see, this is the way I plotted it, right? This is the one possibilities. Other possibilities could be like this. What if it's going to be the concept of equality, which is already past 175.92? So if you see that 1 point, let me make it clear a little bit, let me zoom in. 1.618, 158. So most likely 160 to 158 we have a confluence happening, so that could act as a good one if it's going to stop, but it's very difficult because of the volume, and if it happens, still it's going to be about this downfall. I'm not advising anyone to buy anything below 152 because 35 to 40 bucks downfall is right there, very quick in Tesla. So always, as I say, stronger heart, happy mind, happy trading, and thank you for watching.